There is a big misconception when it comes to indicators in the market because many people use them to find the direction of the market, and that might actually not work quite well very often, as I will now show you in the video. So today, probably you have already guessed it, we will be speaking about indicators and when you're supposed to use them, and most importantly, when you are not supposed to use them. So without further ado, let's get straight in the video. And if it's the first time that you see me, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe to the channel for more free education, and I will see you in the video. The question, do indicators actually work, is one of the most asked questions that I actually get. And my answer is always the same. My answer is they work, and at the same time, they also don't work. The point of this answer is that they work if you use them in the right way. They don't work if you use them in the wrong way. What do I mean by wrong way? Now, the wrong way to use indicators is to add so many indicators that on your chart that you don't even understand, you don't even see the price action anymore. You're just basing all your analysis on indicators, okay? And if you're basing your analysis on indicators, keep in mind that all indicators are lagging, okay? All indicators are lagging. So basically what happens is that the indicators will start to give you the signals after the market has already made its moves. So it will not help you understand the future, okay? Indicators do not help you understand the future. I've seen so many people just add hundreds of indicators to their charts, okay? Indicators over indicators over indicators. They just start adding all indicators and their charts just become an absolute mess, and they don't even understand where the price action is. Where is the support, where is the resistance, where are the patterns? They don't understand anything. So at the same time, indicators do and don't work. And when do indicators actually work? How are you actually supposed to be using indicators? Now, you're supposed to be using indicators only for confirmations. And what do I mean by confirmations? Now, indicators are very bad in showing you where the price action is supposed to go. Okay, if you're using indicators to understand where the reversal is, for example, you're using an RSI that tells you when the market is overbought, oversold, guys, it doesn't work. What does work, however, is using indicators to understand the environment of the market on a lower time frame. So for example, what we do, we take the direction of the market from the monthly, weekly, and daily, and then obviously we execute on the 4 hours. Now, we use a series of environment indicators when it comes to the entry to understand if the market is ready to shift its environment, and obviously also the price action and the structure, to understand if the market is actually ready to shift back to the overall trend that we have from a higher time frame perspective, and if the market is actually ready to create the continuation or the reversal that we want to see in the first place. So that is how we use indicators. Now, what I will be doing in this video is also give you a breakdown of AUD and ZD, which is a pair that definitely we need an update on, because the market created exactly the move that we wanted to see from our previous breakdown on this pair. If you remember, in fact, we said that from here we definitely wanted to see the market give us this move to the downside, and that is exactly what the market did. So definitely it is time for an update on this pair, which is exactly what I will be doing in this video. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. So just one thing, I have to take our COT data. So what kind of situation do we currently have in the market? Obviously, I will first speak of the monthly, weekly, and daily time frame. Then we will go down on the 4-hour time frame to see what kind of situation we have from an entry perspective. And obviously, we will also check the COT data, which is the commitment of traders. So what the biggest banks and institutions are currently doing in the market and how they are positioned. Now let's start our analysis from the monthly time frame. Now on the monthly, what we can see. On the monthly, we can see that clearly the market has just rejected an extremely strong level of structure. In fact, here the market had very strong support preceding all this huge move to the upside. Again, the market tested and rejected this area to the upside. Again, the market tested and rejected this zone to the upside here. And currently, lately, the market has tested and rejected very aggressively this move to the upside, also creating a nice pattern. In fact, in rejecting this move to the upside, what did the market do? The market created a nice impulse, correction, and impulse pattern to the upside. And basically, in creating this impulse, correction, impulse, the market has broken above the previous resistance, which is now turned support. So all this previous resistance here is now turned support at this area. And this was also a historical structure level for this market. In fact, it was already acting as resistance here, preceding all this move to the downside, acting as resistance here, preceding this retracement, and now that it is broken to the upside, it is acting as support. Going down on the weekly, what we can see. Now on the weekly time frame, what did we say in our previous analysis? In our previous analysis, we said clearly the market has created an overextended W formation, and from here we want to see the market give us a retracement. Specifically, if we take our Fibonacci from the low to the high of the impulse, we expect the market to give us a retracement to the 0.382, which is the strongest Fibonacci level at the moment in a such strong trend. So we definitely wanted to see this move to the downside, and in fact, we said on the daily, after the market had broken below this previous support, not on resistance, for a long series of reasons, obviously also checking the COT data, we said that we wanted to see the market give us this move to the downside. And I will link this previous analysis in the description, so you can go and check it out for further reference and to see all the reasons for which we definitely wanted to see the market give us this move to the downside. So you can go and check it out. It is linked in the description. Let's speak about our current analysis and our current situation in the market. Now, as we were saying, on the weekly, we have a strong impulse correction and we can expect the market to try to give us a continuation to the upside. However, there is one very important thing to say. We could definitely get a deeper retracement because there is a lot of demand inside of this zone from a monthly perspective. So we could definitely see the market go for a deeper test of this zone before starting the move to the upside. So on the weekly, we can expect a deeper retracement. Now, in general, if you want informations on a retracement in the market, where are you supposed to be placing your Fibonacci? From the low to the high of the impulse. And by doing this, what we can see that the 50% is here and the 0.618 is here. We could definitely see the market go to the 0.618 as it is the golden ratio. But as usual, we have to be reactive in the market and not predictive. We simply know that the market could easily go for a deeper test of this demand before actually starting the move to the upside that we want to see both from a monthly and weekly perspective. Going down on the daily, as we have seen, the market just created a strong impulse to the downside with this move. After an impulse, what do you expect? You expect the market to give a retracement. And this retracement is exactly what we need for the next opportunity to the downside to go and test this strong monthly demand. Now, before I show you how we will be approaching this kind of situation with students, let's first go and give a quick check at what we have from an AUD and an NZD perspective if we check this COT data. Now, from an AUD perspective, we can see that institutions have been shifting their positioning from having positive net positions to having now negative net positions, meaning that institutions went from having way more longs than shorts, with 45k longs and 41k shorts, to currently having way more shorts than longs, with 55k shorts and 51k longs. So definitely we had a decrease in the net positions from an institutional perspective, so we did expect some weak AUD. And from an NZD perspective, what do we see? Now, from an NZD perspective, we can see that clearly institutions have been increasing the net positions on the NZD, going from minus 1.4k to plus 4.1k net positions. So definitely institutions shifted from having more shorts than longs, with 20k shorts and 18k longs, to having now more longs than shorts, with 19k longs, 15k shorts, with a 53.9% long exposure and 42.4% short exposure. So definitely NZD has been getting very strong, and in fact, AUD NZD has been making the move to the downside exactly as we wanted. And now that the market has created this impulse, If the market will give us a retracement, that will provide another opportunity for us, because after the retracement, inside of this retracement, what we will be doing with students. Inside of this retracement with students, we will be monitoring price action from a 4-hour perspective, because as usual, monthly, weekly, and daily combined with the COT data are the best time frames when it comes to the direction of the market. But the best time frame for entry is the 4 hours. So inside of this retracement with students, we will be monitoring price action from a 4-hour perspective, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries after shifting from a bullish to a bearish market, if the market will do that, then we will be taking a nice short with students for a very good risk to reward and very good probabilities for the move to the downside and completion of this impulse, correction, and impulse pattern to the downside, and for the market to go and test this monthly demand. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find it linked in the description. You first learn all the rules of my rule-based strategies in the program, and then you trade them live with me. In fact, every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, take profits, as well as having me answering every single question that you have every day, including the weekends. So I really suggest you go and check it out. The link is in the description, and I will see you in.